Good morning. All right, so we got a decent bounce off of the lows down there on this Fed announcement, which primarily driven by too many put options. Which I was kind of hopeful that we could get down to some of the lower levels, but that didn't happen. Just looking at starting with the Nasdaq futures here, which were down more than everything else, holding these lows. And so this one just poked under the lows and held at 13,000 level. And so now it's pretty much at its destination where sellers are going to show up, and it's in a downtrend. Maybe it gets a bit higher, get all the way here. We'll see at the end of the day where this bar is, and we just continue the factory work. So wide range bar yesterday. Right? There was the gap up, of course. So, but we're looking at 24 hours, so we can see that. So for now, I guess take a secondary line in the sand and say, okay, big wide bar, halfway mark is around there. Can it stay above there? In the next day or so, and if it can stay above here on a closing basis, well, that obviously would be relatively bullish. It's still within the context of a downtrend. So when we look at downtrends and we say, is something here bottoming or possibly bottoming? Now we would say this is possibly bottoming because it's down quite a bit. It has reached some level of support down here. It is down, say about 20%. And as it makes lower highs and lower lows, how deep can it get into the prior high? Depth of retracement. I would eyeball that at about 75%, give or take, close to 80%. Here, from there to there. So that's a relative positive. Now, what happens? In a bottoming pattern, a lot of times they disappoint. Most of the time they disappoint after a stronger rally, meaning they just look so obvious that they can go higher, when most of the time they don't, and they give it all back. I think it would be very constructive as far as making a bottom if this didn't go much higher than this and came back down here again and held this area, and then began to make a turn here. That would be a lot more convincing for me, because it would have a correction over time where it held these lows. It could make a higher low, lower low, doesn't really matter, just somewhere in this area of coming down one more time and beginning to make a turn. And I think that could be much more sustainable for some kind of a rally. I don't think it's going to get anywhere near back up to the old highs before a real bout of selling begins again. But, again, as always, we'll see how it unfolds. There's a relatively stiff area of overhead resistance here. And, when we look to the left, one of the things we look for is, are we looking at something to the left that is immediately there? Or is it beyond what's directly to the left? You say, well, what the hell does that mean? Well, has it been tested before? And has it traded above and below a reference point? And this has not been. Right? So the point being, at some point, if this was to trade above here, people look at, well, what was resistance becomes support? Well, yes and no. It becomes a self-fulfilling prophecy. But what we want to see is what's directly to the left, and this has never been tested before. So you have to look at it, these overlapping bars here in a, let's say, a more respectful way, because it hasn't been tested and it's the first time up here. And we see sellers are showing up here this morning. You see this is kind of drifting down, in a relatively calm way, and we do have a pivot low here and this little spike down, and it's holding. So this maybe can get its wave back up again, but, immediate resistance right there. So it doesn't look like we're going to get something, I don't think something big to the upside here to follow through initially at the open. And it'll be interesting to see where this weekly bar closes, because now we've got this bottoming tail bar, which happened actually on the gap down. It was down there overnight and then it was back up again. But a pretty decent weekly bar. So I would look at any pattern like this that's in a pretty stiff, strong downtrend, some correction over time, which would really lead next week to being kind of like inside this week pretty much. And then we'll see where it goes from there. Looking where the Qs are. I haven't adjusted this here. Just drag that up a little bit. Yeah, so 337.50-ish. Gap down. It's not a severe gap down. Meaning if it was gapping down deep into this bar's low, that would be, wow, that's significant. Whereas this is you can see the crosshairs there, kind of meaningless, pretty benign gap down. It's in the top of the range there. And hourly chart there, it took out these highs and it's got room to go up, so I don't discount that it can't go higher. Looking at this, the futures are up at that resistance. And, if this could go sideways here a little bit or get a breakdown failure type of scenario, maybe it can go a bit higher. We'll see. You see the gap fill there yesterday that as it came down in there, buyers came up. That was a pretty nasty little sell-off there, but ripped right back up again. And S&Ps, that up, coming up into its resistance area, and a little pivot high, backing off from there. It's got a void below. You see wide range bars. This was trending up, even though that's had that spike down there to that support area. Wide range bar is a void in a smaller time frame, and as you can see, it's right there. So can it create some support, or does this just keep moving lower down into here? And again, just like the S&Ps, we'll see how far it gets. Wide range bar, 20 MA is about in the middle there, around 42.80-ish. And this is what I was talking about, going beyond what's directly to the left. So what was resistance here, many look at that and say, oh, that should become support. Well, it can become a self-fulfilling thing, but lining up where that middle of that bar is, you can see it's right at, right there, right here. And so, and there's a pivot. We'll see if that can hold 4,300, whole number, or, back down to the bottom of the bar. We'll see. Right now, it's up at resistance, and it's going to have a period of what we call absorbing supply and doing, the heavy lifting, so to speak, as to how does it deal with that. But the depth of retracement here is a bit further. So, pretty good move up in there, relatively deep. It's at resistance, just measuring from pivot low to pivot high. It's a pretty deep move, where over here, it was pretty small, right? And over here, right, this is where we looked for it to make the little M top there, and it did, and led the way down. And now going through this, what appears to be, for the moment, a bottoming process. YM down 145, deeper into the resistance. Look how deep that one is into the pivot high. So from a short-term perspective, this is showing a little relative strength, but it's reached its destination, and it is in a downtrend. Same story. We'll see how far this goes down. Yeah, thank you, Joe. Russell has been in a trading range, up, not to the top of the trading range, but at a pivot high. So while we look at a trading range, and we say, well, ultimately the top is up here. Well, right now it's at this resistance area that it has to deal with and try and get through. You can see right there where it's made this little double top, and there's the top of the range as this little red area goes across both of those time frames. And there's a lot of little spikes up there, which obviously is the top of the range. And so a lot of running in place, going nowhere here, which leads to the same bias of a bottoming process. And now that it's made this short move and it's happened on going into options expiration and the Fed news and blah, 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 show me now what you can do as far as holding up after the news and option driven type of scenario here, or does it all just fall apart again? Um, you know, we've been talking about these yield numbers. That's pretty damn tight. Right? These numbers are coming together, and yield curve inversion is not a good sign for the markets. It's not a turn on the dime type of scenario like a tick indicator. It's more, it isn't more of, it is a longer term piece of information, but it is information where you've got, mentioned interest rates yesterday going up as high as they have. Now, they're backing off a little bit here, kind of a climactic pattern there, but yield curves getting close to inversion, very close, which looks like it's going to happen, which is a precursor to a recession. And we'll see how this unfolds. But interest rates going higher make some people think, hey, that's not so bad compared to the risk in equities. So we've got this scenario where things are playing out that way, but we've got lots of stocks that have been crushed. We mentioned yesterday, and here we mentioned PayPal. Some of these stocks that are down. Look at this, 300 or so down to 100, a whole number. And is it at some support? Look to the left, pretty damn close. Maybe comes in a little bit, but these are companies. They're not going. Some we look at, they're not going out of business. They got overcooked because of Corona. Now maybe they're overcooked to the downside. And these could be the ones that, since they're beaten down the most, that could appreciate the most, maybe not get close to turning, the negativity of this long-term trend down. But, we just care about making money in a short term to intermediate term. And some of these things that are beaten down the most could be the ones that appreciate the most percentage wise, but still ultimately are going to be questionable as far as what's going to happen when they reach their respective resistance areas. And it's no different than us looking at the Qs, which have been a protracted downtrend and needing some time. You go back and look at historical patterns, they don't turn on a dime most of the time. And back in Corona day, it did, and made these V type of bottoms. But historically, they go through a period of ebbing and flowing, and they get away from these pivots, and that's what has the ability to make sustainable moves as they reach resistance areas because of time corrections that move away from here. So the closer you are to a reference point, the more potent it is. Whereas you go back and look at what happened here. Go back over a long period of time. I want to move. Well, you put it really. This is amazing as you look at this from a long-term perspective, because this correction and this time correction here, it doesn't look like such a big deal. But this was the NASDAQ going down about 95%. So pretty amazing, and why some people, log scale, that kind of puts it in a better perspective when you put it in a log scale, what happened back there in 2000, how far down prices went from those lows. And, anyway. All right, let's get on with it. Bitcoin up here a little bit, trading range. Oil, mentioned this would be down to an area where buyers would show up, and they have. So markets didn't care too much for this. Got a little climactic strength here, oil moving up, markets moving down a little bit, which And silver and gold should be moving up a little bit. They come down into these areas we spoke about over the last couple of days. Gold is down here. Now that's a pretty sharp drop, in our courses in MTS and the swing course. When we look at retracements, we don't fit them all into one category, meaning, we have, let's call it subcategories, right? Meaning you have retracements and retracements. And one type of retracement is one that is more controlled, and very controlled would be a flag pattern, versus an angle of retracement like this is a lot stronger and often requires retests, versus V bottoms. SPY chart, yeah, you like that SPY chart. Same scenario, whipping back and forth here. It's in a downtrend. It's at, overnight it got up a little bit after the close there, 437-ish. It got up here, and now it's at 433 and change. So the gap down, not a big deal. You got a big mess going on here overall. So we move this up here into that area up there, and it's trying to hold. Look to the left there. You see yesterday where it had that little slowing in momentum and then continued move higher. So same analysis. We apply it everywhere. What did transports had a monster day? Let's see, HL and HCL. Now I'm going to mess that up. This program don't like that. Anyway, I think the cruise lines, they had pretty good days there. And I think the big, that's in a downtrend. That's hitting resistance JBHT. Now that is impressive, so, as a trucker, that is, wow. That is an amazing bar coming out of that mess there. So I don't know if there was any news or earnings, but that is, let's just call that a wow bar compared to wide range bars. Yeah, and yeah, that's kind of a messy there, but yeah, there you go. We'll see how it all plays out here today, and VIX, down here near some support, and so on. So anyway, there's, you have it. We'll see how it unfolds today, and be looking into Friday. All yours, Dan.
Good morning. I am happy for this pullback. When I turned on the TV this morning, I was thinking to myself, please don't be up 300 points because of yesterday's crazy end of day rally. Look at this move. $12 run in 90 minutes. So yeah, Greg talked about it. Obviously, maybe we get a 1, 2, 3, but preferably a whole bunch more sideways bullish price action. But for today, I think we're going to have a ton of put spread ideas. We went through a bunch of them yesterday. We'll be looking at them again today. Greg mentioned PayPal. This was one we did a put spread yesterday. And I said today, we were going to buy over the highs, a directional. Now, I still want to keep an eye on it, but I would have preferred it didn't run that much yesterday. But I think 120, 125 is very doable. This is, it's the flavor of a W, even though it's not textbook. And that's what we tell people all the time. When you say, oh, well, that's not perfect, like page 83. Well, guess what? If you know the whole course and know how to read the messages and patterns of the bar and what's going on, it's the same thing. You had a gap reversal, you had a momentum move down, you had a new low reversal, and it's building support and broke out. So beautiful pattern. All right, so let's just go through some earnings and other things on the list here. So Myrna bottoming pattern, closing breakout. So this is a beautiful, it'd be a beautiful 1, 2, 3 for tomorrow. Today, John, put spread I do. I don't know what got this thing moving, but wow, it's already up here, 350. That's already run too much. Walmart, I just read in the journal that it said they're going to be hiring tens of thousands of workers, but nothing there. So you just move on. Starbucks in the journal too, saying that some guy's coming back to help run it. That thing's surely been underperforming. But look at this weekly, a wide range ending bar. See that? Now you had a big gap up yesterday. Let's actually keep an eye on that for a put spread for next week. AMC was in the news that they're investing some of their money in a gold miner. That's just a chunk stock. XOP, so oil's bouncing here. Let's keep an eye on oil stocks and patterns for put spreads. Same with GLD. Greg mentioned this yesterday. Greg, you said yesterday you thought yesterday's low was too tight, but with the gap up now, let's see if we can get a controlled pullback into the gap fill, and I still like that. This is showing that it's up $3, but I don't see any prints. We'll come back to you. Papa Delta, $31. Now it's not what we call a pro gap because it's not igniting, a new move, but it's a very, very bullish gap. But I don't know, it's big and I don't know what to do with it. Box, that was in some type of news, but no pattern. Riot, I don't know why I was looking at this, but put spread idea. These are all building a big base. JB Hunt was in the news. Greg mentioned that. That's a something wow bar. And the transports, John mentioned UPS yesterday when we were talking about this W bottom. And I loved it. I just didn't want to step in front of FOMC, but I love the pattern. So put spread idea also. Stalled here, gapping up to the prior high. That's strong, with all this inflation. Steel and commodities have been ripping. Hey, John, this is an example. Yesterday, do you remember whatever stock it was? I said it was not a fluid buy setup, and I also said it was deep. This is a perfect example of that this is a fluid retracement. Two bottoming tails. It's deep. So, a typical buy setup in an uptrend where we're expecting a higher high, you want it to retrace less than 40%. This retraced like 70. So it's still tradable, but you just, it's not going to make a new high. So you can kind of see these overlapping bars, which would be my target. So high 33s. Nothing wrong with that. So I see one or two prints down here, so I really don't know where it's going to open. But let me set an alarm at about 3070. And this had earnings. Twitter was a beautiful bottoming pattern. This is a put spread idea plus maybe 30-minute high. This not a bad directional as a bottoming pattern. Amazon put spread. Yeah, it's just, up 2 bars of resistance. But we'll go through them. I think we'll have a lot of put spread ideas. This thing's gapping up a little bit, but VCSA gapping up a little bit. Let's see that's a W bottom. Momentum move up less than a third and a retest. And then a potent reversal. So that'd just be a continuation. Len had earnings. Now this is not a W bottom, but it's building a bullish bottom with the 20 MA flattening. And now I gapping up a little bit. So that's a put spread idea. I'm going to put that in a window actually. Couple retails, GES, gapping at $20, but third bar up. X4, that's a mess. Werby was gapping down, now it's rallying. That's a short watch. See what it does here at the open. That's a bearish gap under these 2 green bars. Kirk, it's ugly. EFOI. Wow, look at this. It gapped up to $2 pre-market. And now it's red. Or pretty flat almost. But bottoming pattern, and it's back here retesting. We'll watch it. This is a breakout from a bottoming pattern. We'll come back to it. SIG, another retailer. Now this is a big gap. This actually might be 30-minute low. We do a 1 DTE call spread. I don't like these overlapping bars I don't like the way it trades. Dollar General, another retailer gapping up 220. This would be a good put spread if there's any juice. Dollar General, putting that in a window. That looks good. That looks really good if there's juice. John, remember stock like this, I say this gives me a headache looking at it. Look at all those overlapping bars. So I'm deleting that thing. This is what we call a churning uptrend, sloppy as can be, but 20 above the 50. WSM, another retailer. Wow, that's a big gap of $15. Look at that. Visually, that's huge gap, but there's no pattern. Array, it looks higher. It's third day up, but that's